Hey traders, what's happening? Jamie Saettele here. It is October 20th, 2021, and welcome to the FX Power Hour. It's been a couple of weeks since we've done one of these, but obviously a lot to talk about. Some pretty big shifts in the market over the last couple of weeks from, generally a dollar, dollar rally to a dollar decline. So that's where we'll start. Let's go to our US dollar index that we always like to take a view of. And again, do you remember we talked about getting into this big zone, which really we actually only made it to the bottom of the zone of resistance. The bottom of the zone was, the big low from March. We had that big spike lower and then the big spike higher. This was all the onset of COVID, right? And then we had here in Elliott, this would be the November high from 2020, right? That would have actually been the election right there, Biden. And that was all what we call the former fourth wave, right? Of one less degree. So we've gotten up to that level. We've rolled over. This is not uniform by any means, by the way. We've got completely, different things going on as far as the dollar is concerned. Like this index in particular, right, is a quarter each of euro, pound, yen, and Aussie. Aussie's obviously been exceptionally strong, right? And that's the commodity narrative, which has been going through the roof, of course. And we'll take a look there. We might be coming up on a level relatively soon where we might get a pause. But, British pound's been, it's been fine. We're up towards the top of that range. Euro's been pretty dead. And yen has been extremely weak, right? Dollar yen's been through the roof. So what you're seeing then is really a lot of cross moves, non-dollar cross moves. You're seeing, Aussie yen, CAD yen, yen cross is just flying high. Some of the most extreme momentum there, if you measure it with daily RSI, that we've ever seen. And then the same can be said for euro crosses on the downside, like euro Aussie, euro CAD, et cetera, et cetera. So we have dropped, moving, closer to home here with this dollar index chart. We have come into a level where we might, we could see. It's really the first test, right? There is obviously absolutely no reason to suspect that we resume higher. I think we've put in a pretty decent top, maybe the next big top in this big down cycle that started back in March 2020 for the dollar. But we have come into a level here, just horizontal level, right? You got the high here from July. You've got the 50-day average is right there as well, just a couple ticks below the market. Maybe we get a bounce. I'm talking here like, a day or two bounce. I'm not, saying, I held a dollar bullish view for essentially the entire year until recently. And the big reason why, aside from the chart, was the sentiment. If you go to, see if I can find it. Hold on here. Let's take a look at, it would have been somewhere over here. Hold on. Would have been probably early October. We had HB Pilot's got a question. By the way, feel free to ask questions, of course, and I'll do my best to answer them. But says, Jamie, thanks for the analysis. Do you have a tutorial to recommend on the pitchfork settings that you use? I don't have a tutorial necessarily that I've put together. Let's see. I don't know if I can find this. Anyway, we're not going to waste time here looking for which post it was. But the point was, if you go to, I always go to Google News, right? And look at various headlines, and it was literally, it might have been the day before or the day after the time. It was like over here. I mean, it was nuts. And the narrative in the media and the articles that were getting the hits, I mean, had completely changed. It went from like, everybody hating the dollar rally or not believing in it to everybody saying that the dollar was set to rally even more, and specifically commodity currencies were going to get killed. So obviously the exact opposite happened, and these were people from these big, banks. And it's actually incredible to me how these people have jobs. I don't get it. Anyway, moving on. Let's just go through our charts here. Euro. I did want to share a chart. I believe it was from Monday's post or Tuesday's post. This is Monday's post, isn't it? So this is FXE. This is the Euro ETF. I do not trade currency ETFs. However, there are times when they give you pretty good signals. And these are based on volume. So if you're familiar with my work at all, you'll know that I do place an emphasis on volume, and not, in futures, equities, ETFs, what have you. You get pretty good signals at turns. So like there's, a little setup here where you've got a huge move in one direction on high volume at a certain high or low period, and then the direct immediate next bar is in the exact opposite direction. We call that a 2-bar reversal. In this case, it's a weekly reversal, and we got the third such reversal since the inception of this ETF in FXC. So you can see the other two over here. They actually weren't exact highs or lows, but they were very close to massive turns. And we got one last week, actually. So, that reason alone isn't, enough to be constructive Euro. I know Euro hasn't done a whole lot, compared to like Aussie or CAD or whatever, but just going on this analysis here, that might be able to change, or that might be about to change. So something to keep in mind there. As far as the price chart's concerned, this is just an hourly chart here. I don't know why this is like this, but you could have, it's not really the best looking trend line in the world. However, you've got a little head and shoulders action here, right? I don't know. I'm constructive Euro against that little low there, 1570. We have run into former lows here, former support. This is the August low, right? We've run into that level at 1660, and we have, pulled back a bit. So, caution warranted on a very, very short-term basis here. However, given that volume reversal I just talked about, I am constructive here against this 115.70 low. And there's another reason to be constructive against that low, and that is, you can see here's my short-term hourly volume stuff, and this over here, what was that? Was that NFP? I think it was, wasn't it? Yeah, that was NFP. I think that was on the 8th. That was a huge volume hour, right? Those levels, or those volume spikes, I like to use as points of reference. And look where we found support. I guess that was on Monday, right? During European hours, right there. So the market responded there. It's a vested interest, and let's be bullish against that level. Call it a day. Okay. So there we have Euro. Let's move on to cable. we are testing a decent spot here in the British pound. All right, so you've got trend line or channel line, what have you. We are trading right at it right now. You've also got 200-day average just above the market. That's going to be 38.44. We are currently 38.14. So decent spot there. Also, if I were to look at other indicators such as volume weighted average price, so thick line, as always, is going to be the, whatever the VWAP is for the year. In this case, that is 38, and this is futures. Futures and spot are trading the exact same right now. And we've got VWAP from the high, so anchored from the high, and they're essentially the same level. So we're trading right there on both of them. Again, it's just a very well-defined spot, so would be careful with cable here on the long side, and if we got any evidence of a turn, I would be, considering going the other way, right, with British pound. I do, however, believe that the bigger move is probably to the upside. And support, you can see it a little better on a 4-hour chart, but you can see here this 25 line we call, right? That was a very well-defined line. It was resistance before. So if we come back into it, you'd want to probably see it provide support. So, my thinking is probably going to be down in that 36.50 area or something. Eventually for support and cable. All right, moving on to the commodity currencies, which of course are the big movers. Pretty clean charts here. We've gone straight up for like 3 weeks now, right? We are coming into pretty well-defined levels for Aussie. Again, you've got 75.30 to 75.65 or so. Those are lows from back here in April and February, early in the year. 200-day average is right there as well on the, kind of the upper end of that range, as is the channel resistance upper end of that range as well. So let's call it 75.65 or so. You've also got 2 legs up from the low at 75.42. So essentially 75.30, 75.60s, pretty big spot in terms of, a chart level here. And again, does that mean I'm shorting into this? Probably not. However, I'd be aware of it. And, if we did get some sort of, signal up there on an hourly or 4-hour basis, it would be something where you could try to scalp something on the short side. Although, again, I do believe the dollar's turned, so you want to be looking at, levels for support. And my thinking is probably 74.20s, right? There's a couple things there. One, you've got the center line here of that channel, which again was actually resistance back in June. We're actually getting back into those levels already. And it's also this former neckline right here, right? So connect those February and April lows. That was, those well-defined level for support and resistance back in the summer. It was resistance again in September. Might as well pay attention to it for support. And again, that's going to be about 74.20, okay? All right, moving on. So Kiwi, this chart is just looks explosive on a long-term basis. So obviously very, very similar in terms of its short-term construction. 2 legs up is going to be 72.25. Upper channel level is going to be like 72.43 or so. So we're 20 to 40 pips away from a pretty big chart level for Kiwi. But what you really want to pay attention to here is, and this is, this chart just looks absolutely explosive. So hold on here. That neckline right there was a beauty, right? Okay, so neckline, kind of have a wedge. We broke out of it basically yesterday. 200-day average is back near that 71 level. So really 71-ish is kind of where you want to be focusing on for eventual support. And if you look at it this way, and this, again, this is a setup, right? It's not a prediction, it's a setup. And if you want to look at it from, you know, just a simple big uptrend, big correction, right? It's lasted from, you know, February down into August. If that's the halfway point of the move, we're talking like a move all the way up towards 88, which is the record or the high from 2014. So again, is that a prediction? No, it's a trade setup. So, you know, look to buy some back near 71 or near the top side of that trend line if you get back there. And you trade it along the way, the position along the way. But this is a, you know, a possible longer term setup that could absolutely be incredible. So Kiwi, great setup, very interesting. All right, dollar CAD. I was looking for a bounce in dollar CAD. Actually, I have a small long. I'm probably going to get stopped out here in a second. It's just not happening. So we traded around that 618 retrace for the last 3 or 4 days, and tried. I thought this morning after we had that little spike on CAD inflation, and then we started moving higher, and nope, no dice. So you know, levels to pay attention to on a near-term basis here. You got 123, that's the July low. And after that, I mean, it's probably 122. That late June low there is going to be 2250, but 122 is that spike high here from May, and it's also the 786 retrace, which is the next fib retrace after 618, which again, we traded around for the last 4 days. So unless we get up and out of here like ASAP, probably my guess would be, you know, 122 is the next level to pay attention to. Again, if we take out this low here, I'm not going to have any vested interest in this anyway. But eventually, some sort of bounce, if we get it, you're going to be paying attention to this short-term trend line, I would think. And, you know, 125 or so, 124.90, 125, which is going to be former support, would watch for resistance. And that's that. So, yeah, you know, if you think about it like Aussie and Kiwi, it makes sense because we're coming into levels or getting fairly close to levels where we could get something of a pullback. But, you know, the bigger trade is probably to, you know, fade that pullback. In other words, sell dollars on that pullback, as I think the dynamic has changed from, you know, dollar bull to back to dollar bear. Even if we are in a much larger corrective process from earlier this year, you probably have a bigger leg down in the dollar now, at least from where we are. And don't forget, we're coming from more or less range highs on that dollar index, right? Okay, dollar yen. This is an interesting one, and I'd be willing to fade this here. I want to see how we finish the day. But this is cool. If I check this out, I'm going to draw in a go to a daily chart. So I'm draw in just channels. All right, we're going to go to that March low. Right there, right there, right there. Okay. We based around the center line. Believe it or not, this was like 4 weeks ago. And from there, we have gone like 6 big figures, or just about, to the upside. And guess what? We hit the channel today. So this is actually your target, first target or this is your target for the channel, I should say, which was hit today. And we also tagged that high from November of 2017. So many years ago. And again, this is the daily chart. We are putting in a nice bearish candle here. So I think it's worth taking a stand against dollar yen here personally. And, you know, it's just a trade, as they say, not a lifestyle change. I'd be looking for, if I go to hourly chart here, I'd be looking for like 113.20 initially before you got to bounce. You know, so from here, 50 points upside risk against the highs, 100 points downside. Could do worse, right? And that's all I've got for dollar yen. Yen cross, like other yen crosses, are super interesting. Let's actually go, let's take a look there before we look at metals and other stuff. All right, so I want to look at 2 specifically. So CAD yen. Okay, so the magenta dots here are going to denote when daily RSI is above 82. Now currently it's 82.5. Again, very interested to see where we close today, right? Because that's what these figures represent, is closing prices. They're based on closing prices, right? So midday doesn't really matter. We don't know about the wicks with RSI and all that. Well, here we are, 82. Had a little 82 back here in March. Had some 82 action back in December 2016. Of course, that you remember that was the big run post the Trump election. We had that initial rip higher in all things inflation. And the only other time we had a reading like that was actually back in Jan 2013, which really that was the only time when nothing happened in terms of a you know, a counter move. I guess you had a tiny one, but really that was, you know, that was nothing. So just, you know, rarefied air in terms of momentum here, which is interesting. If I look at the price chart, let's go to CAD yen price chart and see what kind of excuse me. Big yawn. All right, so we are getting close to, what is that? The October 2015, so 6 years ago, getting close to those highs as well. So yeah, I mean, look, you can't just because you have a level and an extreme RSI reading, that is a disaster setup in terms of it's start of a setup, but in terms, it's not a trigger, right? Like if you were to just short it 9 times out of 10, maybe it works. I don't know. But the 1 time out of 10 it doesn't, and you have no risk management, you're sorry, I need coffee, more coffee. You're screwed, right? So you don't want to just, you need to have some sort of a setup. Like, what does that mean? Well, for me, we would need some sort of a key reversal. Okay. You know, if I were looking at my volume on futures, I would want to see something like a futures reversal on Japanese yen itself. But if I'm looking at the actual cross, like CAD yen, I'd want to see like a daily key reversal or something. And then maybe I would have an entry or a possibility for an entry at that point. Okay, let's go to Kiwi Yen, which is Aussie Yen, sorry, which is another one. Okay, Aussie Yen just got to a big spot. And again, same thing here. We've got a big level. And we've got some pretty extreme momentum. However, okay, so we are currently 82.56 on RSI here in Aussie Yen. So we had one of these readings back in February. And back in 2014, you can see this is pretty rare stuff, right? Those are, both pretty decent setups. We had some of these readings back in 2012. This is what I'm talking about. If you would have sold these, you probably wouldn't be trading anymore, right? So 2012 and 2013. So again, we also had it back in 2005. Would have been a nice little short there. And we had it back in 2002. So we're going way back here. And we have what? 1, 2, 3, 4, 5. This is the 6th instance when we've had an RSI reading this extreme, right? Out of the previous 5, 4 of them would have worked out as far as fading it or shorting the strength. And the other one would not have worked out at all, and you would have been absolutely destroyed. So my point being is that you need a signal or something to establish a point of reference. You're not just selling into the extreme momentum, even though you're at a nice, pretty level and you've got these nice little dots here. It's not going to do anything for you if you don't have a level to trade against. Okay. So what I mean by that is like we get a key reversal on the downside, and then you can pick that high, whatever it is, and look to trade against it, right? Maybe it takes a couple tries, but that's, just like that's how I do it, right? Okay. So I did want to highlight the extreme momentum in yen crosses. Let's take a quick look at some metals. Silver has been very interesting, constructive here. Headed for, it looks like 2480s or so. That's actually a head and shoulders objective. And then eventually we've got big channel resistance up here, which is going to be about 26, let's call it 2650, 2640, 2650. So very constructive on silver. If you're not already involved in this, I don't know, it's kind of getting away a little bit. But this is really the neckline back here, which we came back and retested. You can see here that was on Monday. If we pull back at some point in the future, watch the short-term trend line, the blue line here. That would be maybe an opportunity to get involved if you pull back to it. Silver, obviously, much better than gold at this point. And if you're that's actually a sign, right, for being a metal or for bullish metals, right? Silver outperformance. Gold here, we are a short-term trend line, got to take that out, okay, in order to be a bull on gold. Until then, it's pretty messy. Again, the silver chart is much better. Copper, lots of talk about copper over the last couple of days specifically. We started pulling back. I actually wrote about copper last night. We got a couple of kind of bearish daily bars here, started to pull back. Was looking for a bit of a deeper pullback, which could still materialize with support basically from 438 to 447, especially towards the bottom of that range, because that's the top side of this trend line. And crude oil. This I don't have much to offer here. It's been kind of a nonstop melt up higher really since the August low, which really was a beauty. But all right, let's see if we can find. First of all, I'm going to point out, let's go to a weekly chart here. Okay, so crude is broken above a trend line. This is log scale, of course, that goes back to 2008. All right, so if we were to pull back to that, that would be maybe your last final opportunity to buy crude oil, to be honest with you, on a very, 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 very long-term basis. But that's where I would watch for support. As for possible resistance, I don't know. You know, that's the dead truth. I'm not sure. If I just look across the chart, you know, this was a pretty clean spot here. What's that, like 87 bucks, right? You can see here and back here. So maybe that's a level to pay attention to. I don't know. I'll keep an eye on $87, I guess. But, you know, support back between, let's call it like low 70s. And that's where, you know, I'll kind of keep my eye on that in terms of crude. Okay. Also, folks, if you are sitting here watching this, the bottom of the screen, there should be a bottom of the screen. Excuse me. There should be a link to Telegram. Check that out, and you'll have you'll be able to, you know, watch or check out all the research and stuff that I post. We always post it to that. So take a look there. Again, sign up for Telegram there at the bottom of the screen. Okay. Last thing I'll take a look at, I guess, here is NASDAQ, S&P. We're sitting at all-time highs just about, so don't really have anything to, what can you possibly say? We don't have all-time highs. We're really not even that close to all-time highs in the NASDAQ. But I am watching this channel from the March low closely. And why? Because the channel is beautiful, and we hit resistance here back in September. We hit support back here on this latest sell-off throughout October. In fact, believe it or not, it was just 1 week ago on the 13th that we were trading at that channel, and how quickly that changed. We are all the way back just about to the center line of that channel. And guess what? That center line was key support back here on the 19th of August, so 2 months ago. So what I'm looking at here is about 15,528 for possible resistance in NASDAQ. And that's about it, right? So yeah, you can see pretty good pivots and all that. And honestly, I would just draw this channel in and follow this channel. In fact, you can have support back here on 15,160, but yeah, resistance, let's call it 15,528. Okay. All right. And that's all I've got for today. Again, join us on Wednesdays here for the FX Power Hour, and have a wonderful rest of your week, and be careful out there. Be careful if you're trying to fade any of these crazy yen moves. I know that I just pointed out crazy RSIs and great levels, but you do need some sort of price confirmation set up in order to get an entry. I know it's hard to wait for that, but be careful trying to fade extreme moves. That's all I got to say. All right, again, Jamie Saettele here signing off for today, October 20th, 2021, and take care. Bye.